morning. It's First Saturdays. My name is Ria Cotton. I am the owner broker of Cotton Realty. And every first Saturday, I share information for my viewers. And today I have a guest, Fola Sawyer. Thank you for joining us to Coffee and Conversation. Today we're talking about the top 10 tax filing mistakes. So it's about that time for taxes. And so I was talking with Fola about some of the mistakes that that are made with tax filing and when people file taxes themselves. And so I want to share with you some of those and give Fola your information as well. So just before we start off, can you just tell us how long you've been in business and where you're located?
Okay, I've been doing taxes for over 14 years. Hope that doesn't age me. And I am located in Oakland, California. And pretty much I'm mobile. You can come to me. It's on the online. So whatever you want, I'm able to provide.
Okay, great. So let's just dive into tax filings. And so I know there's a lot going on, a lot of changes, but we want to focus on some of the mistakes. Now, the first mistake that Fola you told me about was filing status.
Yes.
And so can you tell me about what people need to be aware of when they set their filing status?
So we have 5 different filing status. We have single, we have married, married filing jointly, married filing separate, and head of household. So it all depends. Are you married? If you're married, you have to file filing married jointly. If you're separate, you have to do it filing married separately. If you're head of household, you have to have a dependent and a qualified dependent. And if you're single, you're single.
Okay, cool. And then so also completing proper forms. So there's different forms that you would fill out if you're a W-2, you receive W-2 income versus 1099 income. So can you tell us a little bit about that?
Yeah, so W-2 form is for employees. That means that you work for an employer. And that also depends on the type, how much you make. So depending on how much you make and how many dependents. The W-4 form is very confusing. It says, one for yourself, one for your dependent. You should really consult your tax consultant before you fill that form out. And as a 1099 employee, you should be saving money aside and or making estimated taxes to the IRS depending on what you plan to make yearly.
Oh, and that's a big one.
Yes, that's a big one.
And so do they do that quarterly?
Yes, quarterly.
Okay.
So you do your estimated taxes quarterly. Me personally, I say, if you know that you're going to make an X amount of money, don't let the IRS sit on your money. Put your money into like a fund, maybe a short-time IRA fund, a fidelity account. You can get a little bit of interest, and then when you get hit with the bill at the end of tax time, you'll have that money and you're ready to pay.
Okay, that's good. That's a good advice. And then the next thing, number 3, is exemptions.
Exemptions, and I think we kind of already covered that when we talked about filling out the form. So again, exemptions. So a lot of people file exempt. You're not supposed to file exempt.
Right.
And depending, you can file exempt, but you got to consult with your accountant again or your tax accountant to see, okay, where am I going to fall within the tax brackets? And if I'm having a hard month, can I just file exempt for maybe 1 or 2? But then the thing is, you forget to change it back. And then now it's time to file. You're like, oh my God, I did exempt all year and now I'm owing. So again, when you're filing your exemptions, really get with your tax consultant, because the W-4 form is very confusing, because it says one for self, one for a dependent, but then again, it all depends on what tax bracket do you fall in.
Okay, great. So number 4, using proper business types. So can you tell us how what you see as far as people filing or saying that they're a sole proprietor versus LLC?
So sole proprietorship, you have LLC, you can have a single member LLC, or you can have a partnership, you can have an S Corp, and those are type of corporations. That's S Corp or C Corp. So again, it just all depends on the type of business. So like for LLC, there are some restrictions to where you can be an LLC depending on the type of profession. So then you have to be a corporation. With the corporations, you can either be a C Corp or S Corp. Most C Corps are required if you have a lot of investors. I say do S corp, because with the S corp you're not double taxed. With the C corp you are double taxed, and of course sole proprietorship, you're just a single person. But then also take note that with all these business returns, most of them are pass throughs through your personal tax. So with the C corp it's not, but every other type of business you will either get maybe a K1 or a partnership, and those are pass throughs on your personal income tax.
Okay, that's good to know. And another tax filing mistake you said was proper tracking.
Yes.
And having an accountant. Can
Yes.
you tell us about that?
Yeah. So also, I'm a one-stop shop, so I'm also an accountant. So what I see is there's not proper tracking, and also me, when I first started my business, I guesstimated at the end of tax time. Oh, and literally when I got an accounting software, I was able to account for every penny. And then also with that, you have backup documentation.
Yeah, so that touched on the other points. So having an accountant and also having proper accounting software. And you said there are some free, right?
Yes.
That you can find online.
Yes, and we will list that at the bottom of this webinar.
Okay, great. So the next thing is tracking mileage properly.
Yes, tracking mileage. So we have actual mileage, or we have the standard mileage. The actual mileage is when you account for tune-ups, tires, etc. But at the same time, you still have to track miles, because you need to know the business percentage that you use for your mileage opposed to personal. For standard, you use the mileage, and with that, it goes by the standard mileage that the IRS gives, and I think this year is 0.58 cents per mile. So I would advise a very good app to use is Mileage IQ. Just download that on your phone, and whatever you're out and about, just say start business, end business, and at the end of the year, it gives you a track of your miles. Because when you get audited, you're gonna need a mileage log, and you don't want to wait last minute trying to go to Google Maps or MapQuest trying to generate a mileage log.
Right. Yeah, mileage log for me would be pretty crazy in real estate. But so the app is really important.
Yes, it is.
So the next point is bank accounts.
Yes.
So keeping your personal and your business accounts separate.
And that's very important for different reasons. So number one, I'll say, especially for audit, if you were to get audited, you have all your information in one place, to where your bank account can be a substitute for receipts. These days, how many receipts are we really going to keep? And then if you don't even have an accounting software, at the end of the year, you can pretty much export all your business statements, and you can do a a more accurate account for your income and expenses monthly in total for the whole year.
Okay. And then another thing is understanding that even with personal and business, that if you have multiple businesses, you need to keep those businesses separate.
Yes, you do, because every business is separate. So what I see a lot is with the Uber and Lyft, a lot of people are doing that, and it's a great business, but then at the same time, you might be a broker, you might be an accountant, or you might be a chef, and they're like, oh, well, just put it in one Schedule C. That is not going to fly with the IRS. So you need to keep businesses separate, and the same thing when it comes to accounting and tracking your different expenses and mileage.
Okay, great. And then the last thing, number 10, is not being aware of tax reform and updates. So can you share with us some of those?
So so as a seasoned tax professional, we are required to take a number of hours every year just to stay updated on different laws, changes, and especially with Trump, there are a lot of new changes this year. So it just varies depending on your circumstances, depending on your business. So it is very important that even if you choose to do your taxes yourself, do consult with an accountant. And another thing that I do say is, okay, if you have one W-2, you can fly by with doing taxes yourself. But if you are starting to have businesses and you have homes and you're cashing out dividends, 401ks, definitely consult a tax accountant.
Okay, all right, great. Well, I'd like to thank you for spending the time with us to go over this, and I'm sure that a lot of people gain something out of this video that will help them prepare for the tax season. And so, in ending this, I just want to share your information. So, it looks like you have a website, and can you give us your website address?
My website address is www.fsawbiz.com, and that's FSAWBIZ.com.
Okay, and then if they want to contact you by phone?
My phone number is 510-507-2973. You can call me or you can text.
Okay. So, so check out, share this information. Of course, I always say that don't keep this information to yourself. Definitely forward this video and share with family and friends, coworkers, and hope this all helped prepare you for the 2019 tax season.
Oh, Ria, we forgot to cover filing dates, and that's very important.
Oh, okay. Okay.
Yes.
Okay.
So for everybody thinks April 15th is the deadline for all the tax filings, and that's not true.
Okay.
So individuals and C corporations are due April 15th. But March 15th is another due date, and those are for LLCs, partnerships, and S corps. Those are due March 15th. And also with those schedules, they're going to go through your personal return. So that's why they're due March 15th. So you can have ample enough time to file them with your personal return. And those are due April 15th.
Okay, so then those are prepared in March, and then when you go to do your personal, it's added together. Okay.
Yes.
Great, great. Well, keep that in mind, and we'll see you next time on Coffee and Conversation. Thanks for joining me.
Thank you.